Thank you very much and welcome to Masterview Accounting. This is the third video in this series, and my advice is that you watch the videos in a sequential order for easy learning. You may consider subscribing to this channel for free access to these videos. In this video, we are going to look at books of original entry. So books of original entry, which are sometimes referred to as journals, are accounting books which are used to record the different types of business transactions in a chronological order. They form the first set of books where information from source documents which pertains to business transactions is formally recorded. You can think of this journal as an accounting diary which keeps record of daily transactions which happen within the business. So the journals which are kept within the business include sales journal, purchases journal, sales returns journal, purchases returns journal, the cash book, and the general journal, or what is sometimes referred to as the journal proper. So in this video, we are going to consider the first four, that is the sales journal, the purchases journal, the sales returns journal, and the purchases returns journal. So let us start by looking at the sales journal. So the sales journal, which sometimes is referred to as the sales daybook, records details of all credit sales made by the business within a particular period of time. So the source document which provides information to the sales journal is the invoice, the sales invoice. So when we want information within a particular period of time of all credit sales, we will simply look for copies of sales invoices which have been sent to clients within that period of time. So the format of a sales journal is as shown in that slide. We have the title is the sales journal, and we have the four columns. And the four columns are, the first one is for date, the date of the transaction. The second one is for details, that is the description of the client who bought goods on credit. Then the third one is folio. Folio means the page number in the ledgers where that client's account is kept in the ledger. And the amount is the amount of the transaction. So that is the format of sales journal. And now we are going to move to an illustration to try and understand how transactions are recorded within this sales journal. So the illustration is as follows. Enter the following details into a sales journal. So the year is 2022. The month is March. So on March 1st, credit sales to J. Omondi amounting to 18,700. On March 3rd, credit sales to J. Atieno amounting to 16,600. On March 6th, credit sales to V. Charles amounting to 12,000 shillings. On March 10th, credit sales to J. Njoroge amounting to 5,000 shillings. On March 17th, credit sales to F. Mwangi amounting to 28,900. On March 19th, credit sales to U. Okech amounting to 66,000 Kenya shillings. March 27th, credit sales to V. Sarah amounting to 28,000 Kenya shillings. And finally, on 31st March, credit sales to L. Kate amounting to 78,000 Kenya shillings. So those are the transactions which have taken place in the month of March, the year 2022, and we are supposed to transfer the information into a sales journal. So how will our sales journal look like? It will look like this. So the title is the sales journal. Usually the title is preceded by the name of the business. Now that the transactions were given without the name of the business, we simply write their sales journal. So the title is sales journal. The date, we have the year 2022 and all the dates when the transactions took place. On the details column, we have the names of all the clients who have bought goods on credit from our business. On the folio column, we have left it blank because this is just for practice purposes. But in practice, what happens is that in that column, you record the page numbers where the accounts for those clients are kept within the ledger book. On the amount column, we are recording the amount owed to the business by each of the clients. So let us look at all those transactions the way they have been recorded. On March 1st, the client is J. Omondi. So in the details column, we write J. Omondi. I've explained why the folio column is left blank, but in the amount column, we have 18,700. That is the amount the client called J. Omondi owes to the business. On March 3rd, Jia Chieng is the client. The amount is 16,600. On March 6th, the client is V. Charles. The amount is 12,000 Kenya shillings. On March 10th, the client is Jane Njoroge. The amount is 55,000 shillings. On March 17th, the customer is F. Mwangi. The amount is 28,900. On March 19th, the customer is Eo Kech. The amount is 66,000 shillings. On March 27th, the customer is V. Sarah. The amount is 28,000 Kenya shillings. And lastly, on 31st, the client is L. Kate, and the amount is 78,000 Kenya shillings. So at the bottom there, we find the total, and that is the total which we transfer to the sales account in the sales ledger. So we are going to look at ledgers in the subsequent videos, and we are going to learn on how to transfer those totals to the sales ledger or to the sales account in the sales ledger. So for now, that is how those transactions are supposed to be recorded in the sales journal. Now from there, let us move to the next journal, which is called the purchases journal. So the purchases journal is a journal which is used to record details of all credit purchases made by the business. So the source documents which are going to be used in this case are copies of purchase invoices, or rather the invoices which we received as a business from our suppliers. So the format is as shown there. The title is Purchases Journal, and it also has 4 columns. The column for date, that is the column where the date of the transaction is recorded. We have column for details or description. We have column for folio, and we have column for the amount. So let us look at an illustration and see how we are going to record transactions in a purchases journal. So illustration, enter the following details into a purchases journal. The year again is 2022. The month is March. So on March 1st, credit purchases from J. James, 18,800 shillings. On March 3rd, credit purchases from G. Njoroge, 67,000 Kenya shillings. On March 6th, credit purchases from V. Virginia, 20,000 Kenya shillings. On March 10th, credit purchases from J. James again, 35,000 Kenya shillings. On March 17th, credit purchases from F. Oluoj, 38,900 Kenya shillings. On March 19th, credit purchases from U. Oma, 7,500 Kenya shillings. On March 27th, credit purchases from V. Agnes M, 39,000 Kenya shillings. Lastly, on March 31st, credit purchases from L. Ken, amount is 98,000 Kenya shillings. So how will our purchases journal look like? It will look like this. So the title or the heading is Purchases Journal, and I've told you that heading is usually preceded by the name of the business, but in our illustration, the name of the business was not included. So we just have the heading as Purchases Journal. Then we have the date column, we have the details column, we have the folio column, we have the amount column. Just like the sales journal, in the purchases journal, the folio column will contain page numbers of those suppliers as they are kept in the ledger book. In real practice, that is what we write there. But for purposes of learning, we leave that column blank. So this is how our transactions have been recorded. On March 1st, J. James is the client. No, J. James is the supplier. This time it is not the client, it is the supplier. He has supplied goods amounting to 18,800. On 3rd of March, Jean Joroge is the supplier and the amount is 67,000 Kenya shillings. On March 6th, the supplier is Virginia and the amount is 20,000 Kenya shillings. On 10th of March, again, the supplier is J. James. The amount is 35,000 Kenya shillings. On March 17th, the supplier is F. Oluoch. The amount is 38,900. On March 19th, the supplier is U. Ouma and the amount is 7,500. On March 27th, the supplier is V. Agnes M and the amount is 39,000 Kenya shillings. And lastly, on 31st, the supplier is L. Ken and the amount is 98,000 Kenya shillings. So down there we have the total, and the total is 324,200 Kenya shillings. That is the total which we transfer to the sales account we transfer to the purchases account in the purchases ledger. That is the total which we transfer to the purchases account in the purchases ledger. So you will realize that every transaction is recorded strictly on the date which it happened. That is why on 1st and on 10th we have the same supplier, but we have to record them separately because the transactions involved by this supplier took place at different dates. So dates is very important when we are journalizing our business transaction records. Dates are very important. Dates are of essence. So we record transactions in a chronological order. That is what our definition gives us. Now let us move to another journal, that is the sales returns journal, or what is referred to as returns inwards journal. So let me start by explaining that when goods have been sold on credit, sometimes the client finds out that the goods which he has received from the business, either they are faulty or they don't meet his specification. So what he does in such circumstances, he may be forced to return some of those goods back to the business. So if he returns goods to the business, as a business, you don't expect the client to pay for goods which he has already returned to your business. So what happens, you have to create an account, you have to create a record of the goods which have been returned to your business by clients. So the book or the document where we record transactions related to goods which have been returned back to the business by clients is what we refer to as sales returns journal or returns inwards journal. So the sales returns journal is used to record the value of goods returned to the business by its customers. So we record the sales returns daybook, details of all credit notes which we have sent to our customers for goods which they have returned back to the business. So credit notes are documents which are sent to customers, notifying them that their account with us has been credited. In other words, what we expect them to pay has gone down. Reason being, they have returned some goods back to the business. So once we have sent credit notes, we must keep record of the amount of goods which each client has returned within a particular period of time. So the format of sales returns journal is as shown at the bottom of that slide. The heading is Return Inwards Journal or Sales Returns Journal. But what is unique about this journal from the previous two is that there is an additional column for credit note number. That is the column where we record the credit note numbers for the various credit notes which have been sent to clients. So we have the date, and the date, as usual, is recording the date of the transaction. Credit note number is there to record the credit note number which has been sent to different clients. Then the description of the detail describes which client has returned goods. The folio is the page number for those clients, and then the amount is the amount of goods which have been returned by clients. So before we look at an illustration, let us look at the purchases returns journal so that we can look at the illustration which covers the two of them. So just like the sales returns journal, the purchases returns journal is a book where we record transactions pertaining to goods which we have returned back to suppliers. So when suppliers supply goods to us, sometimes those goods do not meet our specifications. So when they don't meet our specifications, we also have that right. We can exercise the right of returning the goods back to the suppliers. So once the goods have been returned to the suppliers, we don't expect to make payments for such goods. So we have to create a record of the goods which we have supplied or which we have returned back to the suppliers for purposes of knowing the amount which the exact amount which we are going to pay our suppliers. So that record which shows the amount of goods returned back to suppliers is what we call purchases return journal or return outwards journal. So the format is as shown at the bottom of that slide. We have the date, and then we have the debit note number. When you return the goods to the supplier, you always prepare a debit note which you will send it to the supplier. And we discussed at some point that a debit note is that document which acts as a means of formally requesting for a credit note from your supplier. And then we have the description column or the details column, we have the folio column, and we have the amount column. Now, let us look at an illustration which will cover all the books we have discussed so far. So we are having an illustration, and the illustration is as follows. You are to enter the following details in the books of original entry, and the year is 2022. So the month is July. July 1st, credit purchases from K. Amos, 380,000, M. Ochieng, 500,000, and N. Oluoch, 106,000 Kenya shillings. On 3rd, credit sales to E. Ken, 510,000, E. Ross, 246,000, F. Ton, 356,000 Kenya shillings. On July 5th, credit purchases from R. Kule, 200,000 Kenya shillings, J. Wanga, 180,000 shillings, D. Mwangi, 210,000 shillings, and C. Kange, 66,000 Kenya shillings. On July 8th, credit sales to A. Ben, 307,000 Kenya shillings, H. Kim, 250,000 Kenya shillings, and J. Tony, 185,000 Kenya shillings. On July 12th, returns outwards to M. Ochieng, 30,000 Kenya shillings, Watch 16,000 Kenya shillings. July 14th, returns inwards from Eros 18,000 Kenya shillings. FTOM 22,000 Kenya shillings. July 20th, credit sales to FROS 188,000 Kenya shillings. EPOL 310,000 Kenya shillings, and EDAN 420,000 Kenya shillings. July 24th, credit purchases from Nyarikini 550,000 Kenya shillings, and K Musiu 900,000 Kenya shillings. July 31st, returns inwards from Eros 27,000 Kenya shillings, and EKEN 30,000 Kenya shillings. July 31st, returns outwards to J Wanja 13,000 Kenya shillings, and C Kange 11,000 Kenya shillings. So what are you required to do? To prepare the books of original entry. In this case, you are supposed to prepare all the books of original entry, but the information we have here pertains only to the 4 books of original entry which we have discussed so far. So let us see how we are going to prepare the sales journal, the purchases journal, the purchase returns journal, and the sales returns journal. Let us see how we prepare the sales journal. So sales have taken place on 3 days only. Sales have taken place on July 3rd, July 8th, and July 20th. Let us go back to the question and check whether that is true. So July 3rd, we have credit sales to EKEN 510,000, Eros 246,000, and FTON 356,000. Let us see whether the transactions are captured as such. So the title, as usual, is the sales journal. So the date is July 3rd. 3 transactions took place. Goods were sold to EKEN 510,000, Eros 246,000, and FTOM 356,000. Again, there was a sales transaction on 8th. So we have credit sales to A Ben 307,000, H Kim 250,000, and J Tony 185,000. Is that what is recorded? Yes, on July 8th, A Ben 307,000, H Kim 250,000 Kenya shillings, and J Tony 185,000 shillings. And lastly, on 20th, there is also credit sales. So credit sales to Eros 188,000, EPOL 310,000, and EDAN 420,000. That is what is indicated there on 20th July. Eros 188,000, FPOL 310,000, EDAN 420,000. So total is 2,772,000. That is the amount which is going to be transferred to the sales account in the sales ledger. Let us look at the purchases journal. So purchases have taken place on July 1st, July 5th, and July 24th. July 1st, K Amos supplied 380,000 worth of goods. July 1st again, Emu Ching supplied 500,000 worth of goods. July 1st again, Enoluoch supplied 106,000 shillings worth of goods. On 5th of July, Arcule supplied goods amounting to 200,000 shillings. J Wanja supplied goods amounting to 180,000 Kenya shillings, and D Mwangi supplied goods amounting to 410,000 Kenya shillings, and C Kange supplied goods amounting to 66,000 Kenya shillings. And finally, on 24th, C Tony supplied goods amounting to 550,000 Kenya shillings, and K Musiti supplied goods amounting to 900,000 Kenya shillings. So the total there is 3,292,000 That is the total which is transferred to the purchases account in the purchases ledger. Let us see whether we have prepared the return inwards journal. So return inwards journal, goods were returned by clients. So on 14th of July, 2 clients returned goods. F. Rose returned goods amounting to 18,000. F. Tom returned goods amounting to 22,000 Kenya shillings. On 31st of July, again 2 clients returned goods. E. Rose returned goods equivalent to 27,000 Kenya shillings, and E. Ken returned goods equivalent to 30,000 Kenya shillings. Total amount of goods returned back by clients is 97,000 Kenya shillings. That is the total which we transfer to the sales returns account in the sales ledger. Now the last book of original entry which we prepare here is the return outwards journal or purchase returns journal. So we returned goods on 2 different days. On July 12th, we returned goods to 2 clients. That is Emo Cheng. We returned goods amounting to 30,000 Kenya shillings. On Enolwatch, we returned goods amounting to 16,000 Kenya shillings. The second day is 31st July, where we returned goods to J. Wanja amounting to 13,000 Kenya shillings. And C. Kange, we returned goods amounting to 11,000 Kenya shillings. The total of goods which we returned back to suppliers is equivalent to 70,000 Kenya shillings. So that is the total we transfer to purchase returns account in the purchases ledger. So that is what we had for you for now, and you are advised so that you subscribe and you stay alert for more videos which are coming, covering many more areas in the field of accounting. Thank you very much, and let us meet in the subsequent videos.